Steve Maroun, welcome to Property Insights.
Thank you, Mark.
Mate, tell me you are a director of LaneVick.
Correct.
LaneVick's a property developer.
That's right. That's right.
Tell me about what you guys do. Like, how did you first get involved in this business? What's it like to be a director of LaneVick, and what does LaneVick do? What do you specialize in?
Yeah, beautiful. Thanks for firstly having us on the podcast.
You're welcome.
Appreciate the making it happen.
Well, we didn't make it happen. Mo did.
Exactly right. I guess I don't know if the boys have told you the backstory of what we had to do to get here. So, but we'll leave that for another conversation. But LaneVick is a boutique developer. We specialize in luxury, low density, sort of higher end product.
Is that housing or apartments?
It's terraces, apartments, owner-occupier products. So
right.
We've transitioned from a larger scale, medium density developer over 6-7 years ago. So it's a family business. It originated with my father in the late 90s. Old man came from overseas, started cement rendering in the late 80s, did well in the business, started developing with his brothers in the late 90s. Rode the Olympic boom, did very well, and then GFC came and pretty much wiped everything out except the family home. That coincided with me sort of finishing school. I finished school academically, I did well, but I didn't know what I wanted to do in school. I just knew I wanted to be in business. Top legal studies, so I thought, you know what, let's just go into law. There's a strong sort of attitude in our community to go to university. So didn't want to let down the parents, being the eldest, and so walked into my first legal class at Fundamentals of Law at UTS, and I was like, man, I do not want to wait 4 years to open up a business. So I was like, what can I do to something now whilst keeping my parents happy, going to uni, so that I can, you know, get into it. And so I thought, you know, during high school, I'd gone to work with my father, with my relatives, and I had some basic hands-on experience. And so I thought, you know, I'll door knock some real estates and maybe I'll just pick up some property maintenance jobs. And what started as door knocked, I think, like 90 real estates. And I think one of them, you know, gave me a shot, and they'd always say, you look so young. And I started to grow this little beard and made me look a bit more, maybe that's what gave me the shot. And what started as a fence paling job grew into bathroom renos, kitchen renos. Then we picked up a contract for inspecting social housing. And
what's that?
21. So inspecting social housing.
Inspecting for the government.
For the government. Correct.
Looking for defects or...
Correct. So government has a substantial amount of social homes. Every year, as part of their maintenance requirements, they need to fire checks, safety checks, and all that good stuff. And so I was 21 years old, and I remember the opportunity came up next door to the family house, and we were in a position financially to acquire it. And that became my degree on property development. Commissioned the first surveyor to go out on site to start the due diligence, to start the development application process. And 5-6 years later, that sort of became the foundation block of where LaneVick sort of reincarnated from the previous. So So
what did you build there?
So 24 apartments, area called it's Wentworthville, next to Parramatta. It's about 7 minutes so from there, and it coincided with, well, that's got a story in itself, but I don't want to obviously drag into it. But we literally had 4 years of legwork getting to this point, and you can imagine working and just pumping money into DA, pumping money into DA. Got to the point where we had achieved the DA. Now to go get construction funding, and you're obviously very well learned in this space, but you've only got an asset, but you've got basically shit all income, and you want to borrow, $7 million to build this thing. Who the hell are you? So we had to raise money creatively. So we raised some debt, and then we financed. We raised the finance through senior debt, and we broke dirt on the day the government declared a national pandemic. We looked at each other, old man and I, and we're like, what the hell are we going to do? And he looked at me and he said, look, there's only one way to go. Put your head down and just
go forward.
Just go forward. And it turned out to be the best time, and I think the last time ever to build. Sundays opened up, labels were at all-time low, supply was at an all-time low. We were able to build boxes there for a price that I think will never ever be seen again. So
in terms of labor or in terms of materials?
In terms of labor and material. So you can imagine the sentiment at the time. So we're talking March 2020, where the whole world is going over, is going to blow up, and the labor. So tradesmen were just, they didn't know what to do, right? So they were just honestly just negotiating against each other on this.
Give me the job.
So just give me the job, correct. And it wasn't even just about to work, it was about to get out of the house. Like construction was one of the only industries that was a critical industry. And so we were, the first COVID run, that I think that 11, 12 months, we didn't know what was going on. We were literally like on the job site doing what we're doing, and all around us, was foreign to us. So it turned out to actually be quite a turning point for the business, because we were able to deliver, I think it was 4 stories in a basement in 10 and a half months, where traditionally that's an 16 to 18 month process. And so that sort of became the foundation and the building block of what was to eventuate from that. And we were fortunate enough, as we were also coming out, the government's just absolutely stimulating the economy with, the home builder, first home buyer grants, and
home loan 1.99 or 2% home loans.
2% home loans, and our product was just perfectly placed. That $600,000, $650,000 market, they just got eaten up. And we were, look, honestly, we were very fortunate. You look back and you think, like, how did we get here? And I think, there's an element of luck, but at the same time, I think you got to put yourself in that driving seat to be the benefit of that. So, so now we've transitioned. So at the back end of that, we started, that's our bread and butter. And we've sort of had to transition with the market the last 5 years. We've seen the market has moved away from investment stock to deliver investment stock right now just does not stack up.
And what do you mean? So there aren't the investors out there?
Not necessarily there aren't investors, but to deliver the product, you've got to build the thing, right? And to build the thing, it's on a portion of labor and supply. And when you look at labor and supply through COVID, obviously is very well noted, the supply chain just got absolutely smashed, like price of iron ore,
steel,
price of timber, price of, correct, absolutely shot through the roof. And then the labor, right? Labor, we don't have a homegrown community of tradies here. Last 20, 30 years, I think it's always been the goal of parents to get their children to go to university, and it's always been seen as a trade, it's been seen as the substandard way to go. And so we have to import them in, right? And I think the government hasn't really focused much on prioritizing that skill, that workforce there. So labor is skilled labor, right? Like anyone can go and get a builder's license, anyone can go and be an electrician, anyone can be, but like we're talking skilled trade. Like there's a way that, there's a plumber and there's a plumber, right? So I think that's contributed to this 30-35% increase in construction costs. And when you say 30-35%, it's not necessarily, you're not going and buying a chewing gum for $1 that's now $1.30. You're talking a standard house or a standard duplex that cost prior to COVID 1.2, 1.1 to build is now like 1.6. That's $500,000 to the bottom line. So that's not going to that's straight to the bottom line. And so that has basically resulted in this in this economy right now, where we're seeing is 95% of developments do not stack up to deliver the product
at a price
that first home buyers, upsizers can afford. You're breaking even. You're doing work experience, if not losing. So there's two things. There's two ways that this has got to go, right? And one, construction costs either have to come down.
Well, is that possible?
Has it ever happened in your life?
No, it was
when was the last time you saw deflation happening
in terms of paying? I can't imagine that a builder or a carpenter is going to take less money off you.
Correct, because he's got a wife, he's got a
children.
You
go next door and get more money off the bloke next door.
100%. And the second thing is, purchase prices have to move up, and prices is linked to borrowing capacity, and borrowing capacity is linked to interest rates, and interest rates is linked to inflation, and so we're in this perfect storm right now. Against us, correct. And the industry at large is not just having this issue from these two factors here. You've got a once-in-generation building regulation going on in the construction industry. The state government, I don't know if you're well known, they've created a commission, a building commission that is pretty much changing the way regulation has ever been for New South Wales. And the regulation was much needed, but the timing of it, which coincided with COVID, which coincided with all these interest rates, has resulted in a perfect storm. It is literally a perfect storm right now.
What do those regulations do, though?
So those regulations are pretty much, they've overhauled the planning and the construction processes the way that they were prior, right? So the biggest overhaul has been accountability. So Mascot Towers, Opal Towers were two high-profile examples of correct, right? And what the state government, through their findings, what they found was that there was a lack of accountability on consultants and on building practitioners, right? And so in a nutshell, what this regulation wanted to do was pretty much have a person that they can point the finger on that has an insurance policy that vulnerable consumers can claim on. So in simple English, I don't want to get to the technical, the technicality of that. That's been the aim, in my opinion, of the regulation. And don't get me wrong, you're making the biggest purchase of your life as a first home buyer, right? And I think you deserve the right to know that what you're moving in and what you're buying is fit for purpose. But I think the timing of that has...
Well, what does it do though? Does it cost more? Does it cost you more?
Exactly.
Is it the regulation costing you more, or is it the insurance policy?
The compliance insurance policy. So our designers, their PI has shot up like a ridiculous amount, right? Like you're talking structural engineers that have a, say, 2 million policy for probably, I don't know, don't quote me, it's probably 30-40% that's increased, right? And that's just because now insurance companies are obviously more, they're focusing and lasering more on the risks that their work produces. And so insurance policies are shot through the roof. The compliance.
You're talking about the premiums.
The premiums, sorry, have shot through the roof. And then we're talking also in terms of our compliance costs. So when we talk about, like the documentation, right? Like traditionally when you have a process where you acquire a development application, then you move into a construction certificate. That process now, the documentation required to provide to meet the standards has doubled and tripled. And it's got to a point where, there's minor things where if say a simple construction joint on one plan has the line going this way and a construction joint on another plan has the line going this way, it requires a coordination where, long story short, it's created a huge hurdle to achieving a permit to start the construction. And
so it's created delay.
It's created a huge delay.
And obviously costs. And
costs, correct. And look, rightly so. And it's still in tethering. It's still in the teething process. It's still relatively very, very new.
So what does that mean then? So does that mean that therefore there's going to be a lot less property supplied?
In a nutshell, yes.
And what happens to builders? They go broke?
So I think...
Or do they just go to business?
I think builders have to adjust for that risk. And there's a whole school of thought right now where it's being said that builders have the wrong business model, and these fixed price contracts that are traditional in the industry are too heavily favored towards developers. And this new world of cost plus, right? Of this is what it's going to cost, and we'll just put a margin and splitting that risk between the developer and the builder.
So open book
is starting to happen right
now. But
an
open book system. So I can now audit if you're building for me. I'm the developer. I can actually audit your costs because I don't want you just rorting me.
Correct.
Just delivering me. Here's the cost.
You're going to have your accounting. You're going to have your structures and your systems in place to ensure that you're not getting obviously rorted, of course. But I mean the principle is that cost plus sort of basis rather than this lump sum. We'll take on all the risk, you leave it to us and we'll sort it out. So what
are you guys doing to manage it? So, how do you compete in this environment?
Yeah, perfect. Great question. We're very fortunate enough that we're actual builders as well. So we have construction in-house. So we're builder developers. We've originated from builders. And so we've been fortunate enough where we've been able to mitigate that risk by controlling the process in-house. Has that meant that it's a lot more difficult to scale and grow and expand? It has, but for us, we've in simple English been able to mitigate it by controlling it in house.
So in terms of the investor market that you were talking about before, that's sort of disappeared a little bit.
It has.
Then I therefore expect you're going to whether your market is the owner-occupier market.
Correct.
So
correct.
What's the difference between developing and building for an owner-occupier market than it is to say building and developing for an investment market?
Yeah, great question. I think it's the goals and the outcomes of those two different markets. An owner-occupier is obviously looking for a place that they call home, and a place that they know is going to stand the test of time, a place where they can entertain, a place where they can securely live in, a place where they can call home. Whereas an investment market is more looking for a yield. They're more looking for a return on investment. So I guess the same way you weigh up a business opportunity, or the same way you weigh up like any sort of investment, is a return on income, right? And so this property is going to cost me $1 million. It's going to give me 50 grand in income. That's a 5% gross yield. I compare that to the other opportunities I have, and I make a decision based on.
So when you're building for the owner occupier as opposed to the investor,
do
you say, well, the owner occupier wants, I don't know, a different type of cook?
Great question.
They want water filters.
Great question.
A backyard.
Look, owner occupier is a lot more custom, right? So you've got to be a lot more detailed, and you've got to have your research needs to be spot on, because you really need to understand who you're building for, right? Whereas an investment market is quite broader, and it's more about durability. It's more about sustainability. It's more about understanding that this investment product that I'm putting my hard-earned money in is going to give me the 30 years of depreciation that it comes with it. So it's two different types of avatars, I guess you could call them, with two different requirements. Yeah.
So, but maybe we could just get a little bit more detail about that, because given that, I guess the first question though, before we go into that part, I'll park that for a second. Are all developers / builders looking at this the same way, and are we therefore going to have less investment properties for sale? And more owner-occupied properties? Is everyone thinking the same way as you?
Well, I think, look, at the heart of developers is that it is a business, right? And if a business can't turn a profit, then that business goes out of business. And I think it's fair to say that many developers are looking at the development sphere right now in the same lens. The productivity, the state government commissioned the Productivity Commission to write a report on what's actually creating these biggest hurdles to construction, and it contacted the CIE, the Centre of, can't remember the name off the top of my head, and they conducted a feasibility analysis on what an apartment costs to deliver today and what an apartment costs to deliver in 2018. And what it found was that to deliver an apartment in 2018 versus to deliver an apartment in 2023
to the investor,
to the investor or the owner occupier, or to whoever, or first home buyer, like investors and first home buyers and upsides, they could be in the same market. But when I say investment, I mean that more, that 75 square meter, 2-bedroom, 2-bathroom sort of, blocks. And what they found was 95% of areas today are unfeasible compared to, I think it was like 35% of areas in 2018. Don't quote me. And so, to answer your question, I believe, I think, where we are right now, you're seeing the only product that's working is owner-occupier product.
So where does it leave us then? So are we talking about Sydney? You guys just Sydney?
We're Sydney, Sydney Metro.
So where does that leave us? So if that's the new model, the developer model is owner-occupiers is more the marketplace, then therefore it seems like we're going to have a less supply of renter style properties.
Correct.
And therefore we're going to have more pressure on the rental market.
Correct.
Because there's going to be less properties for people to rent.
Correct.
And it's just going to keep pushing the cost of living up
That's
more
right.
and more.
That's right. And that's why the state government has really made it a key focus over the last 12 months to...
Well, what can they do?
Well, look, I think one of the recommendations was that the state government right now has one of the most ambitious infrastructure programs right now. And what that has been doing has been draining critical labor from the domestic
from housing across to infrastructure.
They make an example in the report. An unskilled laborer, unskilled truck driver, driving on the Snowy Mountains project is making $180,000 a year.
Wow.
you compare that to private, domestic industry, it's half of that, right? And so we can't compete with the government in terms of their demand for resources. And so I think that's one way is, the government to take not necessarily to stop infrastructure, but to focus on the areas that's going to deliver more housing. I think that's one way.
Is that a recommendation or from them, or are they just?
It was a recommendation, if I'm not mistaken, because they delved into it in quite a bit of detail. And second to that was opening up the skilled migration to skilled tradespeople.
But is that a thing? I mean, Steve, like, is that possible? Like, I don't know, somebody comes in from India or whatever.
Yeah.
China, India, I don't care where they come from. South Korea. And they were a carpenter there. They say they're a carpenter there.
Yeah.
Like, how do you vet that shit?
Yeah, look, and that's obviously a whole nother issue, right? I mean, it's one thing saying we can do this, but it's a whole other thing enforcing it and making sure that's right.
Like, they might have been a carpenter in their village, but
look, I mean, of course we've all experienced on a construction site. You can imagine it's there's people saying they can do things that they can't do, and vice versa. I mean, look, the vetting process of how that works, the logistics of that, obviously it's for people much smarter than me. But I can tell you, in terms of on the ground and in the trenches, it's a real issue. It's a real issue. This lack of skilled tradespeople. So I think, to answer your question, I think that's probably.
So if I'm a skilled tradesperson and I'm a truck driver, I'm an experienced truck driver.
Yeah.
On the example you gave before.
Yeah.
Well, if they're asking for new staff in the Snowy Mountain Scheme, I'm going to go down there for 180 grand.
Mate, most definitely.
I'll stay there for a couple of years.
I think I'll go with you as well. I'll put my business on hold.
Yeah, save some dough and come back here and with plenty of cash.
Correct.
So it doesn't really matter. So a couple of things got to happen here by the sound of things in terms of being able to make housing development affordable for people like you who create supply of new housing, is to fix this, not only fix the skills, importer skills into Australia, and
to change this sentiment around the tradespeople in our country here. The TAFE, like reinvesting back in our TAFE system. I think it's been left to the side to the benefit of the universities. And like, let's be honest, I think today, I don't know the numbers, I don't know the stats, but I think we're probably the highest percentage of graduates that are not working in what they studied. I'm one of them. I'm actually a lawyer by profession. Yeah. So I think Mo as well is another one of those. So I think refocusing that investment in local tradespeople, I think is imperative.
So where to from here for your organisation? So what are you guys going to do about this?
Great question. Look, for us, obviously, we'll continue to, I guess, analyse, and we'll continue to research, and we'll continue to look at what the market wants. I mean, we're developers, and at heart, our job is to create and provide the highest and best use. Block of dirt, block of land, who is going to benefit the most from what we want to build here? So we'll continue focusing on the fundamentals. And those fundamentals will, steer the business in the ways that it will. And I think owner-occupiers will be a huge part of that. I think we've been very fortunate that our business is able to deliver in a time where we can reduce the risk of construction by having it in-house. So having a builder in-house, having our development arm in-house as well, and having our acquisition in-house has really given us a competitive advantage, where prior to the COVID, builder developers were looked at as banks' biggest risk in the industry. Yeah. Now they're looked at the only people to fund. So it's always, and I've always had this question in my mind. I'm like, why are builder developers, seen as higher risk? And obviously they got more to lose because they're concentrated and whatnot. Like, from an investment point of view, it makes sense. But now it's like, well, they're the only ones that can pass on the margin from the construction and the development to come out alive, not even just to come out alive to the other end. So, yeah.
So if you were to make a prediction where the property market's going to be in a year's time in terms of pricing and availability, what do you say? I
think right now, land prices will continue doing what they're doing. I think it'll stay steady, but I think apartment prices are ripe for a boom.
You mean the good value, or
I think just purely from replacement costs.
Yeah, you can't rebuild what
someone's rebuilt. So you're building an apartment for, say, $450,000 4 years ago. Now that's $650,000, $700,000. that's going to naturally push everything up. But this stigma of purchasing off the plan and this purchasing apartments and is still holding that back. But I think with time, there's just going to be no other option but buying apartments. And the government has made it clear they want to go up, they don't want to go out.
Yeah.
And so there's going to be no other choice. And this is gonna, this will calm down. This regulation, all these issues, you're more experienced than I am, right? And you've seen it's cycles, right? It's all cycles. And so I think the smart money is coming in and has been coming in the last couple of months. And I think the next 2-3 years, the industry is ripe for.
So should people be thinking about buying an apartment now in Sydney? A new apartment?
Look, the cost to deliver them today is going to be the cheapest ever to deliver it. So you're buying something today for $1. In 3 years' time, if you just look at inflation, it's going to cost $1.10.
Yeah.
So you're going to get a 10% discount as of today. So
relative to 3 years from now.
Relative to 3 years from today. Correct. So I'd say yes. I'd say yes.
Well, I mean, I've often been saying that I think the unsung heroes of the property market are apartments.
Yeah.
Good quality apartments, I'm talking about, well built. Because we've got so many people coming to the country for a start, they've got to live somewhere.
Correct.
And a lot of those people are used to living in apartments.
Correct. It's a start, right? So when you come from overseas, that first 2-3 years you're at, and you set yourself up, you make your decision.
You're just happy to be here.
Correct. Happy to be. It's a roof over your head, and this is that's housing at its fundamental. It's a roof over your head, but it becomes politicized, becomes sort of dramatized, but it's a roof over your head. It's at its base form. Yeah. Sorry to cut you off.
No, it's probably no problem because I think that those apartments will represent good value in time, assuming the immigration numbers keep rolling out the way they have been rolling out. Well, Steve Maroun from LaneVick. Do you call yourself LaneVick Developers or just LaneVick is the name?
Oh, LaneVick is the name of the.
Steve Maroun, thanks very much for coming in. I've enjoyed it a lot, and it's interesting to find out from a developer's point of view, and you're a builder as well, but from your point of view, where this market's going to, because it's easy to talk to mortgage brokers, it's easy to talk to lenders, it's easy to talk to even small builders. It's easy to talk to consumers or people who have big portfolios, but rarely do we get the chance to talk to a developer who's at the coalface. Yeah,
and I appreciate them. I appreciate it. Look, that's been, I guess, the benefit of being in the trenches and not necessarily, as you said, being on the finance side or being on the construction side, but being in the planning, being in the acquisition, being in the construction really gives us, we're dealing with everyday people in these different departments and industries, and so we're able to really give a true on the ground experience alive from what's going on. So appreciate it. Thank you very much.
Good job, mate. Thanks, Steve.
Thanks, Mark. Appreciate it. All the best.